Hello and welcome to the Trading Bell Show. I'm Noki Pimboy. And looking at the way markets are performing, it is quite interesting because there are plenty of opportunities for institutions, companies to raise money. Many opportunities. Question is, when you look from a wide lens perspective, you can look at the market. Half year of the year 2022 has been a little bit going on the downside, but the trajectory, it says that the market's going to bounce back. So the question is, what are the opportunities at the boss? Well, right now I'm joined by Mbithe Muema, who's the Chief Business Officer and recently joined NSE. Congratulations.
Thank you so much.
For starters, once you have Chief and Business on your name, that's already a big post. What exactly are you doing under this capacity?
First and foremost, Noah, it's a pleasure to meet you, and thank you so much for having me on your show. You're right, I just recently joined the Nairobi Securities Exchange in the capacity of a Chief Business Officer. Really, the role and the mandate is to create visibility of the capital market products and to actually look for targeted audiences and talk to them and say, there are opportunities to raise long-term and patient capital on the bourse. So the function is now to be able to now create access and awareness to these opportunities, whether it's listings, raising of equity, whether it's bonds, corporate bonds or green bonds. If you're in development, whether it's REITs, that's the real estate investment trust, or whether it's actually coming onto our private market platform, the Unquoted Securities platform.
Yes.
And it's such an exciting time, I tell you, because we have actually been getting numerous people saying, come and speak to us about this, help us understand this, or, we didn't even know this existed.
Yes.
So it's an exciting time, and we are just going out there and telling people, you know what? There's a place for debt capital. We appreciate it. But if you want to expand your business, whether it's within one town to the next, one country to the next, you need long-term patient capital.
Yes.
We are in the business of facilitating access to long-term patient capital at the Nairobi Securities Exchange.
That's interesting because, for starters, looking at the equities,
Yes.
majority of them are at the lowest, and people are being encouraged to buy in this dip. So, for equities to be specific, what would the opportunities lie therein?
So for opportunities, I think you have to look at the market in two ways. There's a market for you as an investor, meaning that's the demand side of it, but there's also a market for you as an issuer. So that's a company that's looking for capital. I'll briefly touch on demand, but then focus more on the suppliers with regards to people who could be possible issuers of capital in this market. Now for demand, you are right. When we are talking about the valuations on the bourse, they've actually come off. But what we are saying is, when you look at the underlying financials of these companies for the year ended 2021, the majority of the companies performed better than they did in the year 2020. Second thing, Noah, is when you look at the statistics, leading economic indicators from the Kenya National Bureau of Statistics, we've actually seen an improvement up until April. We've seen an improvement when it comes to production of cement, demand for cement. We are seeing an improvement when it comes to the number of approvals of people who have real estate projects. We have seen an improvement when it comes to export and the value of export of coffee and tea. What that tells me, Noah, is that in as much as there are spaces of the economy that are not doing well, the recovery trajectory is actually much stronger this time around than it was 2 or 3 years ago. That said, our market is driven by sentiment. So there is the underlying fundamental value of the businesses, but then there's sentiment. What he said, what she said, what I feel, what do I think? Globally, there's been a birth. There's actually, the global markets are actually going into a bear market. Anything that's below over 20% drop from a previous point in time is considered a bear market. So we have been seeing the global markets tinkering on getting into the bear market zone. That drives a lot of the sentiment in Kenya. In Kenya, over 60% of our market is foreign traded. So that sentiment is notwithstanding what is happening globally, it tends to affect what is happening here. However, the opportunity that we see for domestic capital is actually an opportunity to come and buy stocks that are cheap today and whose fundamentals have not changed materially from what they were last year. I'll give you an example. Some of our tier 1 stocks, telecom industry, there was a stock that was trading at a high of 44. It now came down to as low as 24. it has now recovered to 27. Because what is happening with that price movement is investors are buying and selling based on demand and sentiment, but not necessarily reflecting the fundamental value of this company. So when we say the market is undervalued today, what we are saying is there's an opportunity for you, there's an opportunity for me, there's an opportunity for pension funds, especially because they have long-term capital to make an investment on the bounce, buy companies on the cheap for the long term.
Okay, and talking about sentiments, if that is what impacts our markets, one of the sentiments that has held water for the longest time has been the most stable markets, the bonds to be specific.
Yes.
When things get a little bit shaky, we are looking at the bond market.
Exactly.
We've seen in the local market, even the government has really been criticized on issuing so many bonds, and a lot of people are coming on board. And it's something that you're also trying to encourage in the private sector, arena.
Yes.
What exactly is the value and what is the incentive of somebody coming onto the bond market?
So I'll answer that differently. Let's take a look back. Kenya is known for financial inclusion, largely attributed to the mobile phone. Why I say that that's an important perspective when it comes to investments is you need to appreciate that there was a time there were no banking accounts. Then people had banking accounts. There was a time people didn't have mobile banking accounts. Then they got mobile accounts. If you follow that trajectory, you'll see that people who used to hold money, then they started removing money from under their mattresses, brought it to the banks. Then that move now shifted to people moving to money market accounts. And we saw that jump, especially during the COVID era. I mean, during the COVID season of 2020, 2021, there was an uplift. So what I'm trying to say is the investment trajectory, it's a long-term horizon where because of financial inclusion, you've gotten somebody first come and get acquainted with a bank, get acquainted with mobile banking, get acquainted with money market funds, get acquainted with investing in bonds because they offer you a secure return. So what I'm saying is now that trajectory keeps extending, and then after that particular part of bonds and money market, then comes stocks when you're looking at your investment horizon because of the risk affiliated and the return. Stocks are slightly more riskier than government bonds, but they also offer you a higher return opportunity to be able to make more money. So what we're seeing is now when people have made that return and they are comfortable understanding how do investments work, what does risk mean, then people are beginning now to look at stocks and say, look here, can I make money on the stock market? You make money in two ways on the stock market.
Yes.
Dividend, a company can pay you a dividend, or you can buy a share at a low price and exit at a higher price.
Yes.
Now, what happens when the market corrects downwards? You get a higher dividend payout. So you'll find that a company can pay you anything between 8 to 10% dividend only.
Okay.
The same company, now on capital appreciation, it can give you 5, 10, even 15% return just on the capital movement. So you combine that 10 to 15% return with maybe an 8% return on dividend, you get a cumulative return of at least 20% and above. That's how you look at it.
Okay.
So when you're looking at the entities here, we have over 62 units that are available to you. You're asking yourself, which company has been paying a dividend? Which company is giving me a high dividend yield? Which company can give me at least a 15% return on price? Meaning if I buy at 10 shillings, I can move to 15. That's a very easy way of looking at it. So what we are finding is now the same cluster of people that are doing money markets and government bonds are now saying, aha, we understand investments now. This money I have made, can I put it into a different class? So that's the way to look at it.
Okay.
But without belaboring this point, I think we also need to address the element of now suppliers and issuers, because we tend to focus on demand, that's you and I. But then there's a different element to companies. How do companies benefit from the same market, especially when it comes to bonds, and you talking about investors wanting a guaranteed return? As the NSE, you can raise money through us by way of a corporate bond or a green bond.
Yes.
Let me tell you what's interesting about a bond, Noah. When you raise a bond, typically it's a 5-year bond. Did you know that you pay your principal after 5 years? Meaning that you only pay interest. With a regular bond, you pay interest and you pay principal on a regular basis. When you raise a corporate bond, as an entity, you're actually raising a bond that helps you manage your working capital as well as your cash flow needs. This is why, Noah. You raise a bond for, say, 1 billion shillings. right? Maybe the interest rate on that is 13%, which is what the market is at, or even 12%. Let's work with 12%.
Okay.
So I raise a bond for 1 billion. The interest rate, the coupon of that is 12%. I'm sure you look very smart. What is 12% of 1 billion shillings?
That's
120 million. 120 million. So how a corporate bond works is you will not be paying $1 billion for year 1, year 2, year 3, year 4, or year 5. You pay $1 billion at the end of year 5. So your only outflow as a company is every 6 months you have to pay part of the 120 million. 6 months, 60 million. Another 6 months, 60 million. So if you're managing your cash flows, you're saying, I have all this other kind of debt, but there's an opportunity for corporate debt, where if I look for 1 billion shillings, I'll pay after 5 years, and my only outflow is the interest rate every 6 months. So you don't have payments month in, month out, month in, month out. What that allows you to do, if you want to expand your business, use a corporate bond, because it gives you the leeway to start a new project, allow it to accrue returns with regards to cash flows, then make a lump sum payout after 5 years.
Yes.
That's the best thing about it.
Wow.
So if you've seen opportunity, if you're seeing opportunity coming in the different areas, whether it's in manufacturing, whether it's in real estate, what have you, that's a fantastic way of raising funding for you and tapping into the investment sentiment that says we're looking for a good guaranteed return.
Yes.
Final point I'll make on this, Noah, is this. We've had such great success on corporate bonds. Kenya Mortgage Refinance Company was raising a bond earlier this year in the first quarter of 2022. They were looking for 1.4 billion. Noah, they attracted interest of up to 8.1 billion with regards to bids.
Oversubscription?
Yes, a massive oversubscription. This is a relatively new company, about 2 to 3 years in operation. The uniqueness of it had a guarantee to its bond. It got a guarantee to say, if you don't think we're able to pay, in case we fail, our guarantor will make sure your interest and principal is repaid. That, they were looking for 1.4 billion, the market was willing to give them 8.1 billion shillings.
Yes.
Second case, last year, East African Breweries came into the market with a bond they were looking for 11 billion, willing to pay 13% per annum. They got over 37 billion. With regards to demand.
More than triple.
Exactly. And the other one, we also had Family Bank that was looking for 4 billion. It got slightly above 4 billion. So we're trying to say that there's a space for you as a bank, manufacturing company, relatively new company, to come and raise a bond in the market and be able to tap into this investment cycle that says we are looking for a guaranteed return. So I think that's a balanced way of looking at it from an investor and also from a possible issuer's perspective.
Definitely. And that brings me to one of the most exciting, sections or segments when you talk about real estate investment trust.
Yes.
We've spoken to Econ before.
Okay.
And just looking at the opportunities that lie in rates.
Yes.
On the issue side and also on the demand side
exactly.
of it. Because on the demand, for me, what was interesting, it's the ability for the retail players, especially individuals and small players, to be able to get something and participate in some of these rates.
Okay.
Maybe bring us up to date so far, the status of rates at the bourse.
Okay, so thank you for that. So a REIT, that's the Real Estate Investment Trust. It's a very simple thing. You have properties and you're thinking about developing properties. You construct them using a REIT because a REIT allows you to open up and look for funding from additional investors. You don't have to bear the burden of investment by yourself. There are two types of REITs, Roa. There's the development REIT and then there's the investment REIT. The development REIT, which we call the D REIT, is if you're in the development space and you're saying, I'm developing, I have a plan to develop numerous houses, maybe 50 or 100 units. I want to share the cost of this development with others. You come up with a D REIT, you put the land into the D REIT, then you open it up and have other investors help you raise capital to develop the land from a land to having buildings that are running. It can work for commercial property, it can work for real estate property. And we've been seeing a lot of developments coming up. People saying, I want to specialize in housing for families that have 2 children and maybe 2 adults, 2-bedroom apartments, 3-bedroom apartments. So we've been seeing a bit of a specialization. Yes. So if that's the case, a D-REIT is perfect for you. Then the other one that is also very exciting is the investment REIT. In other words, the IREIT.
Okay.
The IREIT says, I already have apartments or residential or commercial properties that I already own, and I own a couple of them. What an IREIT does, it allows you to move those properties into an IREIT, and then you're able to share that with other investors and generate a return. So you don't have to go through the rigor of, are there people coming into the house? Am I getting returns? You don't have to be the manager. There's a REIT manager who manages for you, and then you also remove it from your balance sheet because it occupies a lot in terms of the capital that it holds in your balance sheet. But the moment you move it to an IREIT, then you relinquish capital from your balance sheet to be able to do other things.
Okay.
And for an IREIT, you pay out 80% in terms of investments from the net profits that you make.
Okay.
This has been the greatest learning for us. We have 3 REITs in the market. We have the Fahari IREIT, which is listed on the main market. Then we have the Acon D-REIT and the Acon IREIT, which are listed in the unquoted securities platform. Yes. That's the USP. We'll touch a little bit more on that later on.
Yes.
But what we have learned with these 3 REITs is this. When you're having a REIT, first try and have it in a restricted form. The regulations allow it to have unrestricted, meaning anybody can come and participate, or restricted, where for a little while you actually have a certain set of investors who share the same strategic vision that you share to first and foremost develop it up until a certain place, and then you open it up to everybody else. So what we've learned is if you're considering a REIT, do a restricted REIT. That helps you out. Then also the other thing about REITs is if you can consider putting them on a pseudo-private market, which is what we have, the unquoted securities platform. Yes. It helps you to come into the unquoted securities platform, and then your medium-term view is then come into the main market.
Okay.
That's also an appreciation that we have found.
All right.
And one of the benefits of doing this is if the structure of your REIT is restricted, and then if it's also closed-ended, the value of your REIT is based on the net asset value of the properties in there.
Okay.
Right? Meaning, if I am in development, if I am a developer or I'm in the construction business, and I have a timeline that every single year I will be developing X units, and I will be putting this into the market, then you can start off with a D-REIT, buy the land, construct the properties, and then you already know every 6 months or every 12 months, move them into the IREIT. That means that the value of your properties is increasing on a regular basis. Because when I start with land, the value is just land.
Yes.
When I put up properties, the value now becomes land and properties. If I have a plan to do a couple of properties on the same land, it means every year I'm increasing the net asset value of what I have in my REIT.
Yes.
And that's the value that you now share with other investors, and now they come and buy into that, and you're able to attract capital to help you develop that.
Wow.
So that has been the thing about it. So in sum, what I'm saying, if you're in construction business, come and speak to us as the NSE.
Yes.
Come and explore a REIT, and if possible, even explore having that REIT on the unquoted securities platform. That's the USP.
Okay.
You also ask about what is the return that investors get, and is there demand? I can tell you for the Acon REIT, we've actually traded about 1 billion shillings since they came to the market. This REIT came into the market last year. The unquoted securities platform, USP, was launched in February last year. As we speak today, it's the month of July. We're getting into the second half of the year. We've seen trades of worth 1 billion shillings worth.
Wow.
So as an investor, there's liquidity available for you. As a developer, you're actually getting and opening up to say, I want to do this with others. If we are aligned strategically, let's start off with them before then we go into the main market and open it up to a larger array of investors.
That's very important to mention, because often when people, even there is criticism of the bosses, like, when was the last time we had an IPO? How many more listings are we having?
Yes.
But just looking at the ecosystem, there are pockets and rooms that any organization out there can take advantage of.
Exactly.
And you've mentioned extensively the unquoted securities platform. That is, if you're not listed, that is an avenue for you where Econ have placed their rates.
Yes.
So is there also a push for more people to come into this particular space?
So yes, it is, because what we did as an exchange is we said these companies are looking for capital, but when we have the conversation of the main market, they say maybe give us some time. So what we came up with was a solution on the USP to say, why not come and start understanding investors, raise capital on this, and then have a long-term plan to get to the main market. Noah, if you're a company in Kenya today and you're depending on debt, it's a good thing. But it's important for you, and you have a responsibility to even your stakeholders, to consider, what value do I get from the capital markets? The best way to look at capital markets, have a long-term view. What do I want to do? I want to have blended finance. Can I do a corporate bond? Can I do a green bond? Can I do a REIT to release funding for my projects? Come and do that on the USP as you're beginning to understand, how does the capital market work? How do I get benefit? And then now you transition from the USP to the main market. So it's sort of like step 1, then you go to step 2. That's the best way to look at it.
Wow. And I like the structure, even when you talk about deepening the markets. For those who love the visualizations of seeing more companies in the main, equities bourse right there, I'm glad that there is a journey that you can take. Start off maybe in the next 5-10 years, you're aiming to be there, but currently we're giving you an opportunity to do so. Mbithe, this has been a learning moment for me, to be honest, and I'm pretty sure you as a viewer, it's been a class moment. We should be having this more often, I think.
Yes, we should.
Over a glass of water or coffee, just looking at the opportunities there are in the market. But that's where we put a full stop today due to time. Once again, welcome to the NSE. I know you've settled in very well so far.
Yes.
Beautiful.
But Noah, I cannot live without just this one last statement.
Which one?
Just allow me.
So
we are, as the NSE, we are listening. We had an NSE CFO conference in the month of June. Very good insights came out. So just allow me to briefly share this. We had a panel discussion with Crown Paints, Kenya Mortgage Refinance, and East African Breweries. I've already talked about the latter two. Let me tell you about Crown Paints. Did you know Crown Paints raised 809 million on the bourse in 20 days through a rights issue? That's what they were able to achieve. That's the equity. So people look for IPOs, but if you're already listed, you can raise money. This is how they did it. Their price was at 26 shillings. They discounted the rights issue by 70%. It was being offered at 10. 94% of their shareholders took this up. Today, that price is trading at 36 shillings or 40 shilling range. Created value for their stakeholders. As a company, raised 809 million. Long-term capital addresses their working capital needs. So for companies in the manufacturing sector, they need to talk to us. You can do a rights issue. You can also come on the USP so that you're able to do a rights issue with current shareholders or a private placement to raise funding for your working capital that can actually go and is patient with you to go for. So as a parting shot, you can raise 809 million in 20 days on the NSE. Thank you so much for your time, Noah.
Speak to NSE. That's the takeaway, actually. With all these questions and engagement, bottom line is, are you speaking to the NSE?
And we can speak to you. Call us. We shall come to you.
Wow, lovely. On our website, the number is there. Reach out at nse.com. And pretty much easy. Mbithe Muema, Chief Business Officer. I don't know whether you're referred to as a CBO. Chief Business Officer, right here at the Nairobi Securities Exchange, giving us a class moment of the opportunities. And I know you can take advantage of these opportunities. So why don't you give NSE a call or drop them a mail if you need clarification? And I believe that you'll be able to be helped. With that said, we have to put a full stop right there, but I'll leave you with the markets.